Avoid these big money mistakes. Hello, and welcome to Fit Finance, where we talk all about finance and career. Don't make a financial mistake you'll come to regret. Managing your finances can be difficult, and mistakes are unavoidable at times. However, there are several mistakes that can be very harmful to your personal money. Here are several major financial blunders to stay away from. You're living beyond your means. You will never be able to move ahead financially if you spend more than you earn. Saving money for emergencies or retirement will be difficult for you. Instead, you'll have to borrow to support your lifestyle, causing you to fall further behind over time. To avoid this, make sure your expenditure is significantly lower than your income. Ideally, you should limit your spending to no more than 80% of your earnings, including needs and wants, so that you may save the rest. Not living on a budget. If you don't have a plan in place for how you'll spend your money, odds are you won't spend it as wisely as you might. In fact, because you don't understand how much you're spending on things that aren't really that important to you, you may spend too much money on things that aren't really that important to you. You may also shortchange yourself when it comes to achieving the goals that are important to you. Making a budget doesn't have to be complicated, and there are a variety of budgeting systems to choose from so that you may find one that works for you. The idea is to choose a strategy and keep to it so that your budget may serve as a roadmap for spending money in ways that are consistent with your principles. Taking on a lot of debt with a high interest rate. Borrowing money can be advantageous at times. For example, getting a low-interest loan to establish a business that helps you earn more money can be beneficial. However, some types of high-interest debt, such as payday loans, can be extremely difficult to repay. If you take out this type of loan or maintain a debt on a high-interest credit card, you're devoting a significant portion of your future income to interest charges, which can make staying within your budget very difficult in the future. If at all possible, avoid borrowing unless you are getting a very cheap rate and the loan is for something that will help your financial status over time. If you do need to borrow, choose for more cheap options like personal loans rather than high-interest ones like credit cards. Purchasing a home that you cannot afford. When you take out a mortgage to purchase a home, you are taking on a debt that will take decades to repay. If you strain your budget to buy a home at the top of your price range, the big mortgage payment you'll be making will likely limit your capacity to accomplish anything else with your money during the decades you'll be repaying your loan. You may also find yourself at a greater risk of foreclosure and always worried about being able to pay your obligations. Higher home prices come with higher home ownership costs, such as higher utilities and property taxes, which might exacerbate your financial problems. Purchasing a car that has not been inspected. People frequently make rash vehicle purchases based on gut feelings. The excitement of maybe owning a vehicle might cloud anyone's better judgment. However, you should never buy a car, new or used, until it has been thoroughly examined by a technician. One of the most typical purchasing blunders, especially for pickup trucks and other vehicles that may be used professionally, is failing to have the machine properly inspected. I'm completely oblivious to the fact that I'm approaching retirement. Make sure you're contributing to your company's 401k or open your own retirement account. A decent rule of thumb is to put aside 10 to 15% of your annual pay in a 401k or IRA. This is money set up for retirement. You should not take it out early for yourself or your children. Working with retirees and those approaching retirement, I've seen firsthand the advantages of prioritizing retirement. When you're paying off debt, it can be difficult to invest for retirement. There are, however, methods to incorporate it into your attitude and financial plan. Not having a plan. Without a strategy, one of the most common and hazardous money blunders to avoid is not having one. People who have a good handle on their money understand the importance of taking time out of their daily life to review their finances on a regular basis. You should set financial goals and make preparations to achieve them. Fortunately, you can prevent most of these blunders, and you can also remedy them if you've already done them. Debt refinancing, for example, may be able to assist you in dealing with high-interest loans. If your mortgage is too much for you, you can always move. The key is to recognize that making any of these money mistakes could jeopardize your financial stability, and to take steps to avoid them. Well, that's it for this video. Give it a thumbs up and share this video to a friend that might need to be cautious on payment apps. Don't forget to subscribe to Fit Finance for your weekly finance and career tips.